Welcome back. You're still with us on Startup Street. It's time for our special series, the Unicorn Health Check, where over the past 1 month, we've created a report card of our most valued startups, delving deep into what's working and what's not. Today, we're going to look at India's startups in the B2B e-commerce space. Akhil Vishwanath is standing by with the details. Akhil, over to you.
India's B2B market is twice the size of B2C and contributes roughly 2/3 to India's $3 trillion economy. While B2C unicorns are more famous, the likes of Zomato, Swiggy, Ola, Nykaa and others, India has seen the rise of several B2B unicorns too. They're going after what's potentially a $2 trillion opportunity. Today, we look at 5 enterprise commerce unicorns who are reimagining existing supply chains by consolidating India's fragmented business-to-business demand and supply. These companies are fueling the engines of Indian economy, the MSMEs. The addressable market is big with over 65 million micro, small and medium-sized enterprises all ready to go digital, but only about 6 to 10 million of them actively buy and sell online. So what's leading this digital adoption? Starting with GST, which formalized a lot of small businesses, then cheap internet and UPI, which ushered them into the digital era. The pandemic exposed the fault lines in supply chains, further driving up digital adoption. And now the China Plus One strategy of global manufacturers means many of these Indian MSMEs are looking at a $1 trillion export opportunity. In fact, 4 of the 5 B2B e-commerce startups on our list turned unicorn at the height of the pandemic in 2021. It didn't stop there though. These billion-dollar startups went on to close multiple rounds and saw their valuations double or triple in the same year. Unlike the B2C peers in the billion-dollar club, India's B2B unicorns have been able to justify their lofty valuations, largely due to a strong pandemic-led growth, scaling their businesses anywhere between 3 to 6 times in FY22. The commentary from the companies tell us that growth seen during the pandemic era could continue, with 4 out of the 5 in the list clocking over $1 billion in revenue in the 2023-2024 period. Off Business, for instance, is looking at a 4x jump over its FY22 revenue. And these companies are doing it with hardly any cash burn when compared to the B2C unicorns. India's B2B e-commerce marketplaces are the most capital efficient among all the unicorns in India. While Udaan, Zetwork and Moglix clocked losses in FY22, their cash burn indicates profitability isn't far away. In fact, all of them are EBITDA positive, which many B2C unicorns are yet to achieve. When it comes to Udaan, it followed a tough period during the pandemic with challenges in the post-pandemic era multiplying for the company, which runs a B2B platform for small retailers. JioMart and other legacy distributors and wholesalers are back in the game, and Udaan has had to rejig its approach amid the funding crunch. The company says it has made strong improvements in gross margins and operating costs that included laying off 500 employees in FY22. Cash burn, the company says, is down at least 60%. Udaan's financing arm, though, is doing well, having disbursed 4,000 crore to small retailers over the last 2 years. That brings us to the future roadmap of these unicorns. Over the next few years, these companies want to consolidate their offerings to include credit and enterprise SaaS products to keep the business with them. Of course, cross-border opportunities and taking their business global will not be far behind. Back to you.